Question number is 1.4.4. A company wants to raise additional finance. Now this question is similar, or it is practically same, just there is a difference in figures. Is it all right? But let us solve it. The company wants to raise additional finance of 5 crore in next year. So it is 500 lakhs. The company expects to retain 1 crore earning next year. Is it all right? So debt, equity. In equity, there is already a retained earning of 1 crore. Further detail are as above. The amount will be raised in equity and debt in the ratio of 3:1. Try to understand, this is not debt equity ratio. Is it all right? This is equity debt ratio. Is it all right? So equity will be 3 portion and debt will be 1 portion. Now try to concentrate. So what should be the ratio is, this is 5 crore into 3 divided by 4, and this is 5 crore into 1 divided by 4. Is it all right? So 5 divided by 4 will be 1.25 crore in debt, and in equity it will be 3.75, out of which 2.75 will be raised through new equity, 1 crore will be from reserves, and 1.25 crore will be from debt. The additional issue of equity shares will result in a price per share being fixed at 25. So P0 will be 25. The debt capital raised by the way of term loan will cost 10% for first 75 lakhs and 12% for next 50 lakhs. That's right. But we are borrowing 1.25 crore. So this is 50 and 75 is 1.25. Is it right? So this will be helpful in finding out cost of debt. The next expected dividend on equity share is rupees 2 per share. Now I told you to decide whether the dividend is of current year or next year, you need to read the statement. Is it all right? Or you can assume anything. Is it all right? The next expected dividend on equity share is rupees 2. So D0 will be rupees 2. Is it all right? Sorry, D1 will be rupees 2. Now if you will see suggested answer, they have taken D0 as rupees 2. Is it all right? They have assumed the next expected dividend will be declared of last year in current year. So it is D0. Is it all right? Which assumption is more correct? Believe me, both assumptions are correct. There is nothing like this is correct and this is incorrect. Someone will say, sir, it is it is not next expected dividend, it is net expected dividend. It is my mistake. It should be D0. D0 is 2. Is it all right? The dividend is expected to grow at 5%. Income tax rate is 25%, will be used for KD because equity shares, there is no 1 minus T. To determine the amount of equity and debt for raising additional finance, we have done that. This is answer number 8. To determine post-tax average cost of additional debt, let us find out of debt. Is it all right? We are having information of equity also. Let us find out of debt. How much total debt we are borrowing? 1.25 crore is 125 lakhs. Out of which, by way of term loan, will cost 10% for first 75 lakhs. 75 lakhs borrowing, interest will be 10%. So interest will be 7,50,000. 12% on next 50 lakhs. Next 50 lakhs, it is 12%. So it is 6 lakhs. This is 13 lakh 50,000. But this is before considering tax benefit. So it is before tax. So we will be using our general KD formula, I into 1 minus T upon B multiplied by I is 13 lakh 50,000. Tax rate is 25%. 1 minus 0.25 divided by 1 crore 25 lakhs multiplied by 100. If we find out this answer, it is 13 lakh 50,000 into 0.75 divided by 125 lakhs multiplied by 100 is 8.1%. It is KD. Let us go for KE. What will be KE? I have told you we'll be using dividend approach with growth if all the informations are available. KE is equal to D1 upon P0 plus G. So D1 will be 2 plus 5%. D0 is 2 plus 5% is D1. Is it correct? It is 2.1. It is 2 into 1 point. Yes, it is 2.1. It is 2.1 divided by 25 plus 0.05 is KE. 2.1 divided by 25 plus 0.05 is equal to multiplied by 100 will be 13.4. Is personal taxation given? No. Is it all right? So cost of retained earning will be as good as cost of equity. Is it all right? There is retained earning also. Is it all right? So I can sum up the question. B to determine post average, and C is to cost of retained earning and cost of equity. Is it all right? So this answer is C. This answer is B. Even cost of retained earning will be is equal to cost of equity is equal to 13.4%. Fourth will be overall weighted average cost of capital. How to find out overall cost of capital? Equity plus reserves. Can I do combine? Yes, because the cost is same, the weight will be totally remaining same. Is it alright? So cost and weight. What is cost of equity and reserve? 13.4%. Cost of debt is 8.1%. Weight of debt is 1.25 in crores, and now I have told you you can remove lakhs and crores because the ratio is important, nominal value is not important. And equity plus reserves is 3.75. Start. Please understand, you can even take this weight. 3:1. What is equity? 3. What is debt? 1. Because the ratio is important. This will be 3:1. Is it alright? Let me take 3:1. It will be same. I need to find out sigma IW divided by sigma. Sigma W is 4. 13.4 into 3 is equal to M plus 8.1. M plus MRC is 48.3 divided by 4 is 12.075 is nothing but KO, which is nothing but weighted average cost of capital. Alright, so this is how we will be doing this question. They have told us to find out cost of equity, then cost of debt, and then overall cost of capital. This was 1.4.4.